and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is the earnings special edition. Our focus will be on Persistent Systems earnings. Well, solid set of Q3 numbers is what the company has reported, and the stock has also reacted sharply in the initial trade today, following the earnings as well. If we look at the key numbers on a consolidated Q-on-Q basis, we've seen a revenue jump of 5.7% on a constant currency basis. 3,062 crore rupees has come in as the final figure. EBIT is also up by 12.5%. We've seen the margins up at 14.9% versus 14% again. What we've also seen is that the net profit has also improved by nearly 15% on a Q-on-Q basis and about 30% on a YOY basis as well to 373 crore rupees. Of course, the company has also declared an interim dividend of 20 rupees per share as well. And the trailing 12-month total contract value stands at $594 million right there. Again, on a sequential basis, this is a jump that we've seen. Joining in to discuss and to decode for us what went in through this strong performance this quarter and what do we expect going forward is the top management now joining in. We have Mr. Vinit Teredesai joining in. He's the CFO of Persistent Systems. Warm welcome to you, sir. Thank you so much for taking the time out for this discussion on Business Today Television. I want to start off by congratulating you for another solid set of numbers that have come in already. And we've also seen the stock reaction come in strong as well following the earnings. Do explain to our viewers, it's usually seen as a seasonally weak quarter for the IT companies. Despite that, you're managing to continuously up your game over the last few quarters. And despite all the furloughs, the holidays, you managed a growth on all parameters. And you've also beaten the estimates of the street as well on many counts. How would you really explain what has gone into this performance, sir?
Wishing you and the entire viewership very, very happy, healthy, and prosperous 2025. Yes, it
Thank
is.
you, sir.
It has been a broad-based growth for us. If you look at all our verticals, banking, financial, healthcare, life sciences, high tech, all put together, all the verticals have shown growth. All these three verticals have basically crossed 100 million quarterly run rate, so they are becoming bigger now. And the order book that has come in has been quite healthy. We are getting more and more into multi-year deals. Our TCV is growing pretty healthy. So that's all an indication of the broad-based growth we are seeing at this point of time. The factors that are playing gone into it, obviously, this is the 19th sequential quarter for us in terms of growth. As you
Yeah.
rightly pointed out, if our reported constant currency growth is 4.6%, but after absorbing a 100 basis point impact on account of furloughs. So on that basis, if you look at it, it is actually a 5.6% growth. And even if you take off the inorganic component that has contributed to this growth, it is around still 5.2%. So that's the summary of how that growth has planned out. I think so. Some of the unique things that have gone into our win deals has been some of our large deal wins, particularly in the high tech vertical, and obviously Sasva, our Gen AI platform, has played a very, very important role in terms of winning some of these deals. We have filed 20 patents this quarter, and some of these are around core AI, the agentic AI, and we do believe there is some definitely a differentiator that has helped us in terms of, that we are creating, that is helping us in terms of winning against some of the large players. On operating margin front, I think so we had already mentioned at the beginning of the year that we aspire ourselves to meet the same margin guidance of what we have delivered in FY24. Our first half was around 14% operating margin. This quarter, it has gone up to 14.9%. The operating parameters helped us in terms, a lot of operating parameters have helped us in terms of delivering that margin in terms of our utilization level now at 87.4%. Right shoring happening in one of the large healthcare client, which has helped us in terms of margin. Currency has helped us obviously to the extent of around 50 basis point. So multiple
Okay.
factors helped us, and we are pretty confident that now for the rest of the year we should be able to not only grow but also deliver on the margin front, and this sets a great foundation for FY26 in terms of what our large mid-year midterm plan is. So if you remember, we had mentioned about 2 billion revenue and 200 to
Yes,
300
yes.
aspiration by FY27. It seems that we are pretty much on track. And as we just completed also our huddle, which is our annual planning exercise just few days back. And what we are laid down, not only reiterated the fact that we'll be able to, we are on track as far as our FY27 target is concerned, but we also laid down we had started laying down a foundation for looking at a $5 billion revenue by 2031. So that's where we are.
That's fantastic, sir. So, at a time when the industry-wide, concern continues to remain as to whether the green shoots that are emerging in terms of demand is going to be sustainable or not, or whether it is for real to see, you're actually giving out these bullish targets of your revenue, $2 billion. You earlier also reiterated you maintain that for FY27, and now you've come up with a new target of $5 billion by FY31. Tell us what is actually giving you that optimism right there, especially at a time when there are a lot of policy changes are happening, government changes happened in the US as well. So and large part of the business does happen from there to offshoring. Do tell us, how does this optimism really? Where is it coming from for you?
See, the 5 billion target is sort of, again, it's in the early stages, but I'll give you few
Sure.
pivots which give us the confidence in terms of how we are managing, looking at it. See, the if you look, as I mentioned, our all the three verticals are into that $100 million quarterly run rate, which basically on an
Yes.
annualized basis are 400 million. Now, all these verticals have a potential basically to grow up to $1 billion individually. And now the second part which comes within that is that these verticals, within them there are sub verticals. So I'll take an example of healthcare life sciences. When we say healthcare life sciences, it constitutes scientific instrument, medical devices, clinical research and diagnostic services, pharmaceutical companies, the payer companies. So all that put together, these are sub verticals which itself have a potential within that $1 billion journey of to
Hmm.
become a $1 billion business units within themselves. So this is our first layer foundation that is helping us. The second is the Gen AI platform led services. That's the
Yeah.
second that will sort of give us a sort of a advantage. See, if you look at, we have grown roughly around 24% in the last on a CAGR basis in the last couple of years. And if you look
Hmm.
at the history of some of the companies, how they have grown, this growth, sustainability of the growth is very much possible. And many of these companies were able to really garner this growth and continue this momentum for a long period of time based on the various waves that helped them at that point of time. So whether you take the Y2K or whether you take the digital or whether you
Yeah.
take journey, all these were different ways whereby these companies were able to consolidate their position and build a very, very strong foundation and grow at that exponential phase. So we do believe Gen AI is probably going to be that revolutionary phase for us, which can give us that momentum and sort of allow us to grow at that pace. The third aspect, which is basically, we are leveraging the partner and our hyperscaler ecosystem, whereby,
Hmm.
we are having our own solutions, but we are also leveraging their Gen AI-led solutions and sort of collaborating and taking those solutions to the customer. And last not the least, obviously, as you grow on this journey, there will be certain strategic capability tuck-in acquisitions that we'll be doing on our way that will help us in terms of giving that additional push that is needed. So these are the four sort of foundations, which obviously we have to do a lot of work on it. This is just few days we have sort of laid down the foundation, but
Sure.
behind that foundation, there is a lot of thought process that has gone in terms of how we believe that journey is possible.
Okay, fair point right there. Let's discuss a little bit on the margins front, sir, for this quarter. What kind of impact did you see? Did you roll out your wage hike impact in this quarter? And will it continue to be persisting even in Q4, or is it done and dusted for this year? And secondly, what is the kind of outlook? Do you have more levers to expand it further? I believe you've mentioned 200 to 300 basis points of an improvement in the medium term is something that you see. So, what will be the key levers that will help you to achieve that, sir?
So it's actually the margin levers in terms of wage hike. We were one of the very few companies who had actually rolled out and implemented our wage hikes way back in Q2 itself. So in effective July 1, we had rolled out the wage hikes, and the impact was already felt in the last absorbed in the last quarter. So this quarter, actually, we have built on that and actually built on some other levers. So I'll call out few things. So if you look at our utilization, that utilization has moved from 84.8% to now 87.4%. There is
Okay.
a large healthcare client which we have been ramping up in the last year and also continuing to grow on that. But there is a little bit of a right shoring that has started happening, and as a result of that, you start getting a benefit out of it.
Hmm.
Currency obviously has helped us in terms of getting some incremental benefit, and then there are other factors in terms of a certain lower cost on account of stock options. There was a very limited component of resale revenue in our overall numbers. So all these factors have helped us in terms of managing it. And please remember, against these tailwinds, we actually even absorbed headwind on account of furloughs, which had actually impacted our margins by 60 basis points. On the revenue front, it impacted almost 100 basis, but on margin fronts, it impacted it has impacted around 60 basis point. And after
Okay.
absorbing, we were able to show a 90 basis point improvement on our operating margins.
Okay. Let's discuss the deals then, sir. You've added one major client also in the energy and services sector, and now your order pipeline exceeds $1 billion. There are many research analysts who expect that advanced negotiations are on at the company for larger deals, and they expect further bolstering of the order book in FY26 also. Could you give us a little bit more detail as to what can we expect in terms of the order pipeline?
Yeah, the pipeline is definitely very, very strong. One of the large deal that we did in the high tech part of it has helped. The win that we got in Q3 has definitely bolstered that we can do large deals. We won that against one of the large players. Again, the Gen AI was one of the key factor that helped us in terms of differentiating ourselves and sort of winning that deal. At this point of time, if I look at the pipeline, if I look at the broad-based growth that I'm seeing across all the verticals, I think so. We definitely feel confident that there is a scope of FY26 to be equally stronger. If I look at on a trailing 12 months basis, as I said, the total contract value is almost $2 billion at this point of time. On
Okay.
a trailing 12 months basis, our annual contract value is already reflecting a 1.4 billion. So all these factors give us confidence that the FY26 should, unless until something real seriously goes wrong, I think so. We should continue this momentum and going into FY26.
Mm, okay. Let's also discuss on your key contribution from the acquisitions Araka and Soho Dragon as well to the top line. How much of it has already come in? What is the peak potential that we can expect, and by when from these two acquisitions, sir?
Yeah, see, the I'll call out all the three acquisitions which we did. The Starfish acquisition, which was done in Q2, we get that, and Arca, which is the data privacy acquisition, which we completed in Q3. These put together, we got almost a 35 basis point impact on our in our revenue. Uh, but if you look at the Soho acquisition, which was anyway, it was more of a vendor consolidation exercise acquisition that we did, and as a result of that, that revenue was already flowing into our financials. So there was no incremental benefit as far as revenue is concerned, but and it got also completed only towards the last month of Q3. So no major benefit in terms of margin that we got in this quarter. But going forward, that's also one of the levers that we'll probably be able to gain on it.
Okay, understood. Now, as far as the AI focus is concerned, you did point out that you're also looking at many deals that are coming in from the AI segment right there. By when do you foresee, substantial revenue contribution really coming in from AI? Have you already started to compute that, calling out that as well in terms of what's the contribution to top line, or will it still take some time, sir?
See, we don't believe. See, AI is going to be an hygiene factor. I don't think so.
Hmm.
Anybody coming out today and saying, okay, this is an AI-led couple $1 million deals, multi-year
Yeah.
$1 million. AI is going to be a component whereby right now the focus is, can I'm spending $100 and I have 100 people to do it. I can you do the same at less than $100? That's where the AI's component is coming into play, and that's what is today. The differentiating factor. If you are able to demonstrate, and convince the customer that $100 bill that you're incurring today, I can do it probably at $80 and even at a faster rate. That's what the USP is. But I don't think so. We believe we are going to ever come and say that okay, out of our overall revenue, so much was contributed by AI. AI is going to be now an key ingredient in every deal. And it's only today the focus is on more on efficiency. Eventually, as the market improves, it will start moving in terms of how can you fast track my go to market strategy, how can you make my sales even more better. So eventually
Yeah.
what is your revenue per employee eventually over a period of time is likely to increase, and the cost per employee will gradually come down. But I don't know, I can't crystal gaze and say whether it will happen in the next 2 months or 2 years from now.
Okay, got that. Mr. Teredesai, Persistent Systems has been consistently performing on its fundamentals and the stock price as well. I mean, in 2024, yours was the best performing stock on the Nifty IT index. And the new year has also started off well. Again, today we've seen a substantial move. Do you see a second year running coming in for your stock performance also, coming in as the best stock for Nifty IT now?
Yeah, we are we are happy with the value that we are creating for the shareholder. That's not in our control. What's in our control is basically uh, doing adding value to our customer and delivering on the numbers. The rest is up to the shareholders to decide.
All right. Well, thank you so much, Mr. Teresai, for being with us on this show to explain to our viewers what has gotten into the earnings. Again, congratulations for this one and all the best for the upcoming quarters as well. Hoping to see you around post the budget as well to discuss some more aspects as well as post the earnings next time around as well to discuss more about the vision going forward. Thank you so much. Appreciate your
Thank you.
time with us.
Thank you very much. Appreciate it.
All right, viewers, that was our exclusive conversation with Persistent Systems. Hope you did get a clarity as to how the company is moving forward with the vision, bullish outlook as far as the top line growth is concerned for FY27, $2 billion target, and for FY31, $3 billion target. Margin expansion is on the way, and things are moving well in terms of order flows as well as the deal pipeline that's shaping up as well for the company. Let's see how this performs also going forward from here. Remember, Persistent Systems, a lot of brokerage houses have come out with their reports post the earnings. Although there's a mixed view, while most and all of the brokerage houses do believe that the earnings are very strong. Fundamentally, the company is on a strong footing. There is just some hesitance from some of the brokerage houses. They believe the stock is already priced in most of this good news, and valuation part is something that they're looking at this point in time. But we'll leave you at that. But do stay tuned. We'll continue to get you more earning conversations throughout the course of the day. And of course, Dow's Insights coming in on your screen soon.